Hi friends, today let's decode Biocon, India's leading biotech pioneer dealing in biosimilars and biotechnology products. Their financial journey reveals a fascinating story of steady growth, margin pressures, and recent challenges. Let's walk through the numbers. 10 years ago, Biocon clocked 2,877 crores in sales. Today, they are at 15,771 crores, a solid 17% compound annual growth rate. The growth has been fairly consistent: 3-year CAGR at 23%, 5-year at 19%, but the most recent year showed a deceleration to just 3.43% growth, suggesting some headwinds in their core biosimilar markets. The big acceleration came around 2018 to 2022, when Biocon's global biosimilar business really took off, especially in insulin and oncology segments. Expenses grew from 2,190 crores to 12,506 crores over the decade. Material costs dropped from 41% to 34%, showing better sourcing efficiency. Manufacturing costs are steady around 9 to 11%, typical for biotech production. Employee cost rose from 17% to 21%, reflecting higher skilled workforce and R&D investments. Other costs also jumped from 8% to 15%, likely regulatory, marketing, and international expansion cost. The hidden gem here is how Biocon maintained manufacturing efficiency even as they scaled globally. Operating profit climbed from 687 crores to 3,264 crores. Operating profit margin has been volatile, peaked at 25% in early years, now stabilized around 21%. The margin compression reflects competitive pricing in biosimilars and heavy R&D spending for new molecules. Other income provides decent support, 248 crores latest, from investments and licensing deals. Interest costs have surged from 2 crores to 938 crores as Biocon funded global expansion and R&D through debt. Depreciation also rose significantly to 1,737 crores, reflecting heavy capex in manufacturing facilities. Net profit grew from 431 crores to 657 crores, just 9% CAGR over 10 years. The journey was bumpy. Profits peaked at 1,429 crores in fiscal year 2025, but recent quarters show a sharp decline. EPS dropped from 8.44 rupees to 3.18 rupees, showing the profit volatility that biotech investors face. The 3-year profit CAGR is actually 10%, but the recent downturn is concerning. Return on equity is 4.76%, which is quite low for a growth company, down from historical highs. Return on capital employed is 6.25%, which is moderate returns on capital. Debt to equity is 0.85, which is manageable, but rising with expansion. Dividend yield is 0.14%. Most cash goes back into R&D and growth. PE is 131, very high, showing market expectations of future growth despite recent challenges. So, Biocon's story is steady grower facing headwinds. Strong long-term sales growth, but profit growth has lagged due to competitive pressures, regulatory challenges, and heavy R&D investments. The recent profit decline suggests the biosimilar market is getting tougher, but Biocon's pipeline and global presence position them for the next growth wave. The hidden challenge is that biotech requires patient capital. Profits can be lumpy as new drugs get approved and markets develop. If this biotech breakdown helped, subscribe to Well Growth Club and tell us which pharma or healthcare company you want analyzed next.